Hello, it's Mark Albert. I really appreciate you being with me. We're going to look at the Bank of Canada. Today they made an interest rate announcement. We're going to see what that is. We're going to look at the reasons why. First globally and then domestically. And then basically we're going to address the bottom line of what's happening this year in 2019 concerning rates. And we'll let you know when the next interest rate announcements are going to be. First of all, there's one coming up in about a month in April and another one in May. So if this is something that is important to you to just understand the reasons why and what the announcements are, please subscribe below and I'll provide the updates on all future announcements. Listen, let's get right into this here. So the Bank of Canada, today being March 6th, 2019, they made a decision. They decided they would maintain the rate. The rate was at 1.75. So I decided to maintain it. Let's get into the reasons why. So first of all, in terms of reasons why, there's globally, they had a few things here. So the slowdown in the global economy has been more pronounced and more widespread than what they were anticipating. If you go back to January, what they were anticipating looking forward, that outlook is about more pronounced, more widespread. So a greater negative impact on the global economy, which impacted their decision today. Also, global trade tensions and uncertainty are weighing heavily on confidence and economic activity. So there's tension globally in some respects from a trade front between multiple different countries in different situations and scenarios. And as a result, consumer confidence and the confidence of the overall global economy in terms of producing activity has been impacted. So this one right here, if things kind of get settled with, between China and the U.S. and some other country stuff, this may improve a bit. So domestically, so in Canada, reasons why they maintain the rate is there's four things here, four primary things. Exports, they fell short of expectations. Business investments fell short of expectations. Consumer spending was soft, and housing market was soft. So you got four big things here. Exports, big deal. Business investments within Canada, big deal. Consumer spending, big part of GDP. It has a massive influence on the economy. And housing market. Housing market, these are high ticket items, and there's a lot of industries that are influenced by housing. And so all of those were either short of expectations of what they were expecting or soft in terms of its performance. And so based on the global and domestic things that I mentioned here, they decided they were going to maintain the rate. Now, bottom line is that there's increased uncertainty about the timing of future rate increases. Wow. So we may go a whole 2019 without any rate increase. It depends on the future, but this is what they're going to be looking for. They're keeping their eye on the following three things. And based on these three things, they're going to make a decision, but the decision is uncertain in terms of optimistically thinking that they're going to increase any rates this year. So first thing is the developments in Canadian housing spending. So consumer spending, which is a big deal. They're going to keep an eye on that. Canadian oil market and global trade policy. So two domestic and one global. So those are things they're going to keep an eye on. So in terms of when the next rate is going to be, so we got April 24, May 29. Those are the next two. So we're in the big housing market, spring move. So if you're looking to buy a house, this is not bad because rates should hold for a period of time here now. Not likely that they're going to increase the rates here, but some think they might. But it's all going to depend on the three factors I just mentioned. So if you have a variable mortgage or a line of credit, your rate should hold as well. So hope this is helpful. Please subscribe below. Look forward to giving you the next update. Have a wonderful day.